it is time. Secretwars keeps on rolling. Stan Weinstein, the more you practice, the more you get it. The more you see the subtleties, and it's like sparring for a boxer. If you spar, you have to go eventually all out because you have to go to that high speed, high endurance mindset and practice. So eventually, if you get exposed to that a lot, then everything slows down. Instead of having tunnel vision and just feeling your heartbeat racing, then you start seeing wide and large. You start noticing the details. You start noticing at every criteria of that framework that you should be looking at. You won't be panicking. You'll be calm. You won't be stressed. And the only way to do that is through hard real life practice. And that's what we're trying to do here with Stan's framework. Keep grinding at it. And when you think you know it, you don't. Just go back, reread the book, and just keep practicing through graphs. You'll get better. All right, Tesla, what do we have? 5 years, weekly candles. I have my 30-week SMA. I have my super important volume indicator. I have my RSI. And I have the super duper cloud, the Ichimoku cloud, which helps visualize eventual resistance. If the price action is above, then you're in an uptrend. If the price action is below, then of a red cloud, then you're in a downtrend. Here we go. So stage 1 exploded back here in 2013. Nice stage 2. Price action went back down. Look at that. Look at that beautiful stage. Let's just go back, man. Right here. Look at that volume explosion right there. So back in those days, you would have entered right around these candles. Look at the volume picking up. And I think any one of these could have been the breakout candle. Maybe this one. This definitely is the huge... I'm telling you, this is a breakout. Hold on. Let's go back like we would be actually back there in those days. And here we go. All right. So the $40 line, maybe a little lower. And here we had... It was a gap up that actually had a lot of volume, but it ended up closing red. Hence the volume turned a lot of volume for a negative move. That's kind of a weird signal. If you didn't buy that breakout candle, then you had these other candles right here that had about twice the average of the previous 5 weeks volume, and it just keeps going up. You had the RSI going up in positive territory, or was already up, halfway point going upwards, and you had the horizontal break above 30-week moving average, above the clouds. And since it was consolidating for a while, you just see that the support and resistance is so thin that you could have had either a breakdown at these levels or a breakout. Always see both scenarios. And that's all she wrote. After that, you would have rode. You would have probably drawn a trend line here. The more I'm drawing these trend lines, the more I'm realizing that they're really effective in exiting at almost close to the top, or at least close to the end of the stage 2, or that's a lot of worse, or at least close to a consolidation phase. So if you want to be in a stock the least amount of time possible, you don't want to live through whipsaws, consolidation, sideways moves. Then the trend line 1, 2, 3, 4. The 5th one's going to be an awesome break. There you go. Here you would have exited right here. Here would have taken half your position. If you would have waited for the weekly close, it would have been on the next candle. Investors and traders, both there out. Sell stops would have been moved along the way, right here. Pull back, move back up. Pull back, move back up. Investors right here under. This is just right here. This is just a beautiful stage 2. And also notice on the pullbacks here, this one had a lot of volume here on this pullback. That's not a very good sign usually. And here we go. But you didn't break the trend line, so you're still good. And then after that, price action just crumbles down and gets closer to 30-week moving average. 3-week moving average starting to flatten out. And then you're just there. You have a couple of things now. What happens when you could draw a line here, and that's going to be your next breakout. If ever the price action goes back above that, then with good volume. And just imagine like what the next possible target, next possible chart pattern is going to be. If you need more space, you create a black move, give yourself some margin, and always anticipate. And there you go, bam, breakout. Right here, this candle. And this one's a breakout. Volume's not super duper, maybe 10% more than the average of the following 3 days. And this volume seems to be coming late, but definitely this one. You have a strong volume right there. Either you would have entered here again, or you could have waited on the pullback. And usually there's pullbacks on breakouts, and there's less often pullbacks on breakdowns. And here's a pullback. Ooh, yeah. There's a pullback on lower volume. You would have entered here. Your sell stop would have been super far here. And if you're the trader, I always think it's a good idea to put yourself under a 30-week moving average as initial sell stop. So what's happening here? Will the price go back up? And yeah, here's a pullback. 1 to 3 months, usually the pullback on low volume, you're safe. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. See, so almost that 3-month period. You really have to believe in the system. You really have to notice if there's strong volume. If the volume is shrinking on the pullback, then don't worry about it. It's completely natural. So even if you entered here on top here and the price action never skyrocketed, you're still in. You could have taken half position here. I think Stan has a provision for traders, I believe. They go all in right away at the initial breakout, and then they wait for confirmation of the weekly candle. So if ever you don't get the volume you want, you would have bailed. And if you do, then you're in. And investors could re-go on the pullback with light volume. They could re-enter when the price action starts going back up to previous highs. What do we do here? Move your sell stops. Investors and traders right here under 30-week moving average. Price action starts going back up. And let's see what happens. Okay, here's a pullback right here. Price action starts going back up to previous highs. You move the sell stop, pull back on lower volume. Price action starts going back up. Move your sell stop here for investors and traders. Then we start going up. And don't forget, always start noticing it if you have a valid trend line. And I believe we had one right here. 1, 2, 3, almost 4, and 5. So that's the end of the ride on that stage 2 right there. That finished in late 2014. I think entering on that candle here was not. It chewed a lot out of your profits. Actually, you rolled this, but the price action, you would have never really had a chance to go into profits. You would have actually lost a little bit. But these candles for Tesla, they're just coming. The volume's coming really after the breakout. You can't force it. I'd rather wait for a breakout candle with the volume and stay with it. But that's why you only have 1% of your NAV that's risk when you do your sizing from entry to your initial sell stop. Worst case, you get whipsawed and you just lose 1%. But most of the times that you're in the you're doing a stage analysis, Stan Weinstein's way, you'll be riding into the profit. And what do we have here? And here you go, right here. This is the stage 3 trendline violation, break of 30-week moving average. Just a bad sign overall. And right here, let's imagine the next resistance, next support seems to be here, and that's how we're going to start narrowing down our. Now we're going to be looking for volume on a breakout candle. Oh, you see, now didn't want to go through, and you see that cloud, the support and resistance now starting to stretch out thin. That's what you want. You want long stage 1 or long stage 3. You don't have to go through a cloud for a breakout. You want to have your price action above the cloud or below it. You want to have the least resistance possible on your way entering a stage. Wow, this has been consolidating for a while. Okay, wow. Okay, what happened here? 30-week moving starting to go down. We're below 30-week moving average. And there's a break. Yeah, almost twice the average volume here. So right now, what about the RSI? Yeah. Going to negative territory. So actually this would have been a triple confirmation for a short. Would have entered here. Sell stop. Initial sell stop. Above 30-week moving average, I think, for investors and traders. Above a round number, maybe 251, 250, 10 cents. And let's just see what happened here. Pull back. You see, pull back on increasing volume. Not a good sign. False breakdown at this stage. And you would have lost. Yeah, we got triggered out, both investors and traders. And you're just back into the trading formation. It's all right. It doesn't always fit the way some charts I've been doing. They just stage analysis just fits perfectly. It's going to fit most of the cases, not all of them. That's why, again, use risk and money management. That's just the market that wasn't ready for that breakdown. And it's continuing. And that's what I think it's going to bring us to today. Oh, getting close. I could restart drawing my lines, I think, now. Right here. Okay, so this is going to be my breakdown line at the 180 level. And my breakout line is right here. All right, let's check that out. Yeah, but we need triple confirmation with volume. Looks like the resistance was still up here. All right, I got greedy trying to make a closer pattern. Usually I always look at the highest resistance and the highest support. lowest support. Could even say here would be the ultimate channel. But let's just wait. Let's hope we get some good volume on the breakdown. Or breakout. Or we not. Oh, okay, breakout. So there will actually a breakout here to the top. Okay, on this candle. What's that volume look like here? Above 30-week MA, above a horizontal line, above resistance. Not twice as much volume. RSI going in positive territory. Look, when in doubt, you hear in my voice, you know when it's a triple confirmation, when it's the best. And even if it does start reaching its target, maybe you always have the choice of not putting your money. Preserving your capital is your first priority. Not trying to fit a Stan Weinstein stage analysis into existence or will it into stage 2. So that's my best advice. When in doubt, just move on. Forget about it. And there you go. So you actually have stage 2. I'm wondering here now with hindsight. I hate hindsight. It's good. You look. Gives you some ideas. But are you cheating yourself? Because when you're in real life and you don't see those candles and you can't really guess the next action. Nobody can guess the next action. It always looks easy when I'm doing it like that. I know that's a drawdown of doing it this way. Best practice would be in real life. I guess that's a trade-off though. Try to be as honest as possible. Keep myself in check. Is there volume on these candles? Let me check it out. Where's the breakout candle? It's this one here. See, there's not that much volume, so couldn't have called it. But it goes up. Refuses to go through a 275 level. Pulls back. Goes back up again. Now we had the breakout on a little bit more volume. Goes up. Pull back on the smaller volume. Goes up again. Not a super duper long stage 2. Trend line. Triggered out. And now stage 3. And that's what you have to realize. Like, no matter, sometimes you could play Stan Weinstein and you hit home runs, and you say, oh, I'm invincible. Then you start playing everything. And you start not selecting the cream of the crop. You're selecting B pluses instead of waiting for A pluses. That's when it gets dangerous. That's when humans actually, you shoot yourself in the foot when you shouldn't. If you have a framework, respect it and preserve your capital. Worst case, just wait it out. Live to fight another day. What I like with my stage 1s, I like when they're tighter than these long ups and downs. But the nice long ups and downs sometimes are good. You could always have these swing rules, which I always forget that there is. Oh. Like that, create parallel line, and if I would have been using my classical charting framework, I would have reached my target right here. There's also that, I keep forgetting that Stan also talks about the swing rule, and as a trend line, you could take half your profit on top of the swing rule if you reach. And on a tight pattern, the swing rule is very short. You maybe not want to use that, but if you have a head and shoulders bottom, you could always you'd want to use a swing rule to do that measure move and take some profits as close to the top as possible. And if it's not the top, don't worry about it. It's continuation breakouts, sideways patterns, consolidations, and you play it off that. And if that's how you have to do it. Okay, here we are today with Tesla. Let me clear everything. Remove all trend lines. Here is, it definitely looks like we're definitely in the stage 3. And it's not looking too good right now. We're going through the cloud. So that's the more we move laterally, the more that cloud's going to thin. And after that, we won't have that little support right here at the bottom. So I have a feeling, emotions, I shouldn't use the word feeling, that next breakdown candle that goes below the 300 mark might be a long candle that's going to close also below 275. If we have that, definite stage 4 that just started. So Tesla is closer to a stage 4 than it is to a continuation stage 2. I'm going to set my alert at 300. Set another alert in case for 385 for the bullish scenario. But right now, wow, okay, a lot of room here to move. That's what it is for Tesla, man. So we practiced a little bit, showed that stage 2, showed sometimes it's not optimal, and try to practice that patience. But right now, that's a clear top in progress right now for Tesla. Is it a descending triangle also? Look, people look at the charts and they all have their different indicators. Some people, they look at this and they see Fibonacci. Some people, they have a whole bunch of different lines. But usually they add up and they give the same signals for the same time frames. Different time frame, completely different story. There's multiple patterns, trend direction changes on smaller time frames encompassed within large time frames. So if I look on the daily, this could even look bullish. Maybe even just this little move going upwards to that slanted top line. That could look like a super bullish stage 2, right? On the daily. And on the monthly, we could still be looking slightly bullish. Let me check that out. Tesla. Oh, the cloud's not too pretty here. Okay, remove that crazy candle. Let me remove the miscalculated cloud. And there we are. It still looks like a top. And remember, this I do usually my classical charting framework. Monthly candles, what's beautiful about it is those wicks, it's a noise. And here, there's probably like weekly candles that closed in that wick. But the monthly candle gives actually the strongest support and resistance. And usually it's tighter range. So right now on the monthly, it closed below. Let's put some more alerts. A close below 305 is a valid breakdown. So you don't have to wait for the 300 to break down if you're looking on the monthly candle. And a breakout above 375 on the monthly candle is a valid breakout also. And what you have here, you have a measured move right here. Right click. Add it to breakdown line, and it's just a beautiful target. Here's the implied measure move, and I always look for what I call target considerations. Will I run into previous resistance or support? Am I on the good side of a round number? And right now, I'm right above here, this previous breakout on this candle. And now that's become support, and I'm right above it. So the geometry of that measured move is perfect. And Tesla, honestly, it looks like a short if it closes below 305 level on the monthly, and it's even the start of a stage. You're in stage 3, definitely stage 3, even on the monthly. So that's a lot saying. So that means the stage 3 has been lasting a few weeks at least on the weekly graph. Guys, check out those levels, 305. And if you just want to play the weekly, know that you have the monthly trend behind you. And a close below 300 is the ultimate breakdown for Tesla. All right, that's it, man. Candidate For stage 4 breakdown, Eminent, Tesla, TSLA, Nasdaq. See ya.